Hello, everyone, and welcome to another elite episode of the Get Authentic with Marcus show. I'm your host, Marques Ogden. On today's episode, we are joined by Mr. Ron Deutsch. But before we bring up Ron to the stage, I want to thank one of our amazing sponsors, US Wellness Meats. With over 25 years of experience in the industry, all grass-fed meats, all grass-fed proteins. They're the only protein that I eat. Phenomenal organization based out of Missouri. We want to thank Mr. John Wood, their CEO, and US Wellness Meats for sponsoring this episode. Now, here he is, Ron. How you doing today, Ron?
I'm good. I'm good. Thank you, Marcus. Glad to be here. Nice to meet you.
You as well, my friend. Ron, first question, sir. What does the word authentic slash authenticity mean to you?
Um, for me, especially in the position that I'm in, where I'm dealing with other people, specifically clients every day, I think it's being genuine, being transparent, and being honest, and letting them know exactly what you think that particular day, and just have an honest conversation. I mean, it's basically not trying to be what you aren't.
Ladies and gentlemen, I've never heard it said that way, but it makes total sense. Not trying to be what you aren't, right? If you're not something, don't try to be something else. Don't try to be something that you know you're either not, can't sustain, can't hold on to, because again, what happens is you get exhausted and it's exhausting all day, every day. So be you because that's the only person you can be. So, Ron, let's chat more about, please tell our global audience, Ron, what it is that you do and how do you serve your client base?
Okay, so I'm a financial wealth advisor. Work for a firm here in New York. We manage about 2.4 billion in client assets. We do everything from financial planning to investment management to reviewing insurance policies. Basically, making sure people are on the correct financial roadmap to keep their assets and hopefully grow them over time as well. So basically, investing is a big part, is most of what I do. I've got other silos here, which I'll go to for other things, but basically we manage money, or I manage money in particular for about 50 families. I try to keep my business at a very limited amount. I don't try to pick up a whole lot more families because I'm trying to keep that kind of one-on-one relationship I've had with all my people for years. Client service and getting to know my clients are the most important things. And I've been able to keep almost all of them now for well over 10 to 12 years. I've only been doing this for about 16 years, actually, not to change topics, but I had a career on Wall Street before this, where I was in institutional fixed income, which is basically bonds. So I learned, I basically, to be honest with you, this is my third career, actually. I was an investment banker for 3 years, after which it was a terrible job back in the early 80s. I had no life to myself. And then the recession hit. So I kind of got laid off, but I was immediately able to land on my feet with the same firm in a different department and got started in institutional fixed income, which was basically mortgage-backed bonds, high-yield bonds, government bonds, municipal bonds, every type of fixed income instrument you can imagine. So I did that for 20 years, over which I also took my Chartered Financial Analyst exam, which is a 3-year exam. So I felt at some point I would want to manage money. During my job there, I was basically a middleman for institutional clients and my firm's trading desk. And I basically had to sell fixed income ideas and transactions to well-educated institutional investors, which is why and where I saw a lot of what go on other parts of the business on the sell side, specifically retail, which is what I deal with now, high net worth individuals and like. I saw a lot of stuff like we'd have inventory in our institutional inventory that we couldn't sell. So they give it to the retail brokers who would then mark it up points and sell it to their customers. And that was that. So I saw that for a long time. And I realized once I was at the end of my career, which is about 20 years almost in fixed income, I wanted to take my knowledge and parlay it into working with individual investors, but in a way where they could benefit from my knowledge and also not benefit from getting ripped off, which is typically what typically happens on the sell side. The Wall Street firms tend to work on commission and other incentivized payments. So it's in their best interest in most cases to deal with clients from the standpoint of selling them whatever product du jour there is where they can make the most amount of money. I currently am an advisor with an individual registered investment advisor. We're fiduciary, which is a big difference between the Wall Street firms. So I'm working for my clients every day to get them the best ideas, to get them the best prices, also the lowest prices for what they can buy. And I'm not buying things with a lot of fees in it. I'm buying the lowest fee possible stuff. And because of my knowledge of fixed income, I actually build out individual bond portfolios for my clients, individual bonds, rather than mutual funds and other expensive items. So it's a low cost way for people to get the best service possible, and for me to parlay my knowledge I had before to my current job. So I basically do stocks, I do bonds, we do alternative investments, etc. A lot of what I do, and I don't know how, maybe I've already answered your question. So if you want to move to the next one, or you
No,
want me
keep going. Keep going.
so, but basically, a lot of my clients are, everyone has a need, especially when you're in retirement or near retirement. Income is a big portion of what they want. And because of my fixed income background and the income that is generated on the fixed income side, I've also broadened that out to alternative investments too. So I invest in secured real estate debt. I invest in triple net lease shopping centers. I invest in royalty deals where we get a stream of payments. When a small biotech company has developed a drug, they sell it to a larger company. The royalties that come in is how we get paid back. So it's all, a lot of cash flow is what drives most of what I do. Obviously, I do equities as well, but it depends on look, it all comes down to the client's demographics, their age, their risk tolerance, et cetera, what I build out for them. And to do that, we have to put up a whole financial plan together, which is typically what the first meetings with a client are about. It's basically for me to learn from the client what they're all about, what they need, what their risk tolerance is, et cetera. And then from there, I'll build out a plan for them, which will then tweak until we get to the point where it matches what they need. Specifically, a lot of people, when they go into retirement, that salary, what they were getting before, is gone. They have to replace that. So I will take his financial plan, and after we're all done with everything, I'll try to reverse engineer into figuring out, based on what their budget looks like and everything else, how do we cover their necessities from a cash standpoint? And whatever's left over, we can then go more for growthy types of investments, et cetera. Is that
You know what? This is great, Ron, because there's so much I can get into, and I will in a moment. Before I do that, I have one more question for you.
Yeah.
How does being authentic and or showing authenticity help you to excel in your chosen career path?
So I'll give you an example. I don't know if this covers it, but I landed a client maybe 15 years ago. She became a widow at 42 years old. Her husband died tragically. She had 3 little kids. And she was recommended to see me, and she saw 2 other firms as well. And I was the last one of the 3 that she saw. And she came in and she dropped these 250-page binders that each of the other firms had given to her in the form of a presentation, et cetera. And she came, and obviously, I was dealing with a very fragile, emotional person here. So I had to be very, very sensitive on how I approached it. And this is interesting because this is feedback she gave me after the meeting, months later after she became a client. But, I looked through her stuff, and before I even looked through like her financials, I asked her more about her family and the kids and all this other stuff. And basically she showed me her stuff. I looked at it, and she said the other 2 people she had met had both said for her to financially be able to survive with no husband going forward, she would need to sell her home, which she had lived in for 10 years with the kids. So I took a quick look at her financials without doing numbers. I looked at her immediately. I said, "You're not leaving your home, because that's the last thing you can do to your kids and take them out of their beds, basically." The financial distraught that they would experience, we'd had to figure out a way around it. And believe it or not, I did. And we kept the home. And to this day, she tells me that sentence I gave her, because of my sensitivity to her situation. Yeah, forget the money, forget the numbers. I told her, we're going to figure out a way to make this work, because you cannot sell your home. And she, just for that reason, more from the emotional and just the whole family unit feeling toward everything. You can't take your kids. The kids were 2, 5, and 7. You can, and these guys both say you got to sell your house, raise the cash, we'll let you rent. That was a later discussion as far as what to do, but she's still in that same house today, 15 years later. Her kids are in college. Her 529s worked for her like we said. I did everything for her need to be, and now the kids are all in college and all worked out. But my point is, I was absolutely, I took off my advisor business hat and put on my Ron Deutsch, a father and a husband hat to figure out in that position, what would you do as an adult dealing with someone in that situation, not as a businessman, so to speak.
Ladies and gentlemen, this type of dialogue that Ron and I were just having, it really makes me so excited for people like him that understand that it's not just about the freaking numbers. It's about the emotion, the relationship. People need to know that you care about them beyond just the sale or the transaction. Like I said, those guys said, well, sell your home and it's this. I mean, yeah, okay. Ron said, we're not going to do that. Like, there are other ways to get this thing done. And that's why 15 years later, that woman is still a client of Ron, and Ron set out for a blueprint of what it needed to be done. And as a result, it got done. And that's what we're talking about because, Ron, my father was one of the first, he was actually the first African American bank manager for his company, the Federal Home Loans Bank of New York, in their DC office in the late 1970s. My dad ran their fixed income, their bonds, like he was the municipal. I remember sitting down in his office, Ron, back in the day, little forms, like, QSIP, this number, this. I remember all that. And I grew up in that. And my dad got his degree from Howard University, then went to Maryland for his master's in economics. I graduated from Howard University with a degree in finance. So I actually worked for Merrill Lynch downtown Washington, D.C. in college until the National Football League came calling, and I got drafted by the Jaguars in the 2003 draft. So I wanted to work on Wall Street coming out of college. That was my dream, to follow my dad, but I would play football. But my question is, right, Ron, when you think about finances, and how you're able to help people. I tell people, I do a lot of speaking, Ron, for finance companies, insurance companies. And we're doing with Mass Mutual coming up here shortly, insurance based, you name it, real estate. And I talk, especially a lot when it comes to finance and insurance, right, Ron? I talk about how it's so important that you have to realize there is the emotion and there is that connection piece as well. So, can you please tell people how important it is, right, Ron, in your business to be interested in your clients versus trying to be interesting to your clients? Because one, you're listening more, and one, you're talking more. Can you explain how important it is to be more of an active listener than it is a busy talker in your line of work?
Yep. Yeah. Look, in the way I run my business, I get her if I got a new client coming in, the first thing I do, I don't even ask them, how much money, where's your money held, this and that. I have them sit down with me and basically go through their family, what their values are, what their risk tolerance is. I mean, it's all subjective feelings because people, risk tolerance, people love to talk about returns in this business, but understanding how much risk a person likes to take or is comfortable taking is really the first level that I have to get to, because until I know how much they can stomach with risk or what their views are and what their values are going forward. Do they have big expenditures planned? I mean, I have to understand their current situation and what they're thinking about going forward, which means listening. I don't say much. I sit back, I take notes, I ask questions, and basically listen. I then take that all together. And then, we'd have another meeting, at which point I'll come back to them with my conclusions. We'll discuss things. In other words, it's a multi-step process, but I have to glean the information from them rather than tell them what to do, because it's really in the end their money. I mean, it's their money, not mine. So if it's their money, they have to take a part in what when I say, what do you think of this or that? I want them to have input into it. Most of my clients, I've taught a lot of my clients very well over the last 10 years, to the point where I joke that they don't need me anymore because they understand how well, and not only how well, but how we invest their money and what we do with it and what the goals are, that they've almost got to the point where my meetings used to be an hour with some of these clients, now they're 20 minutes because I don't have to go through as much detail. I want to educate these people. That's the only time I really speak, is to educate them, to make them understand, if we do this, here's what could result if we do, et cetera. So it's 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 pretty much understanding what's on their side as far as what they need, and how they feel about things, and what their plans are. You know.
Ladies and gentlemen, I love what Ron said about how he is a collaborative partner with his clients because, again, he can hear the information, he can put together a plan, he can present it to his clients. But at the end of the day, as Ron said so eloquently, it's their money. It's their money. So they have to have a vested interest in it and how you build it and how you're going to invest it, what you should do with it. It's funny, right, Ron? Someone approached me yesterday through one of my network and about helping him raise capital for equity in his company. And I said, okay, this sounds great, all this type of stuff. And then at the end of the conversation, he's like, oh, well, also, by the way, he said, my guys would literally, not be able to, they would really give me a hard time if I didn't ask you this question. So if we allow you to come in at 1%, because he's like a defense client, or contractor, has these huge multipliers and all these great, which is awesome. There's lots of great upside, 100%. He said, well, if we let you in for the 1% ownership to help us, would you be willing to write a check for $100,000? Now, the answer to your question is, can I write a check for 100 grand? The answer is yes, I surely can. But again, after listening to what Ron talked about, where I'm at right now, that's a longer play. The 100 grand I could use to grow our business, to invest in our business, to get our pockets even more exposure, more well known, and create more of that stream of income that's passive. And people are just dying to be part of our podcast or our network or our speaking, so on and so forth. My point, ladies and gentlemen, and so he could give me all this information, but I'm going to have to be the one to say, okay, I'm going to do this or not. But you need to have good people like Ron to help give you a blueprint, guidance. And I love this because it's so important. I have a question for you, Ron. From my time speaking, right, my friend, there are three areas that insurance and financial advisors want to focus on to make sure that their business is always in a position to thrive. Okay. I'm going to tell you each one. I'm going to ask you your thoughts. So the first one, okay, is client retention. Okay. How do you, Ron, focus, or how would you tell people that are listening to this awesome episode what they should be doing or what they need to be doing to continue to have great client retention in their business, either finance, whatever the case may be?
So you're saying, in my position, how do I retain? What do I do to retain my
Yeah,
client?
how do you keep your client retention high? That's correct.
Well, I'll be honest with you. I mean, it goes back to what you were saying. They're asking about before regarding transparency and authenticity. Um, you know, we have good periods when I'm when we invest in bad periods. The markets go up, markets go down, clients' portfolios, clients go up and down. And I always make sure, because when I do well, not to take any credit for it, and
Mm.
when I do poorly, to beat myself up and let the client know how upset I am about it. When we do well, I tell my client, here's what we did, here's why we didn't do so well, here's where I messed up, or here's what I could have done better. But I never, when we do really well, I point out why we did well, but I don't pat myself on the back. So you got to kind of keep your ego, under wraps, so to speak. I think number one. Number two is, I explain, like, I go back before, the transparency aspect, making sure the client understands why their money did what it may have done or not done. I mean, again, it's educate. I like to educate my clients. That's a big part of it. And when they're educated, there are no surprises. Clients don't like to be surprised. So, I had this past 3 months, first 3 months during the Iran war and stuff, when the markets did terribly. I have 50 clients. I got 3 phone calls, just curious, how are we doing? I've got older people who worry all the time. And I said, I haven't looked at your stuff. I can tell you right now, I think we're okay. Just because I know how I manage money, and I know what the markets were doing, that I just knew that we were positioned well. And the bottom line is that we did okay. If it was a lousy first quarter, most of my clients were positive, which was very rare. But the point is that People don't even call me anymore. During COVID, I had people calling me, not because of their portfolios. They wanted to make sure I wasn't sick because they said, if you die, who's going to watch my stuff? I mean, they were worried about me. I mean, my clients are almost like my family at this point. And when you have family members, there's an implicit bond and trust right there after this many years, and that's built up over time and over just being yourself, like you said, being authentic and just being transparent. I write letters to clients mid-quarter sometimes if things are going poorly, and just telling them we're fine. Here's what's going on. Here's why we're and just people like to have their hand held once in a while. And after you do it for a few years, people don't even, I've got people now who say, you know what, I don't need to talk at the meeting this year. We'll talk next, like every quarter I do a quarterly meeting. Some people will say, you know what, we'll do it every 6 months. You don't have to tell me every three. Like they have that much trust. It's just trust. And that just gets built up with time and experience. I've been fortunate. I've got a great group of clients and I love every one of them. They're like family. They are, you know.
Love this. I love this. Ladies and gentlemen, it's about the ability to treat people as family, as people that you want to do business with long term, and a very vested partnership, not a transactional based business. The next one, right, Ron, is that relationships. I feel from our studies and our research, a lot of times people in insurance or finance or other areas, they focus on trying to transactionally get as much sales or as many sales as possible from clients. And they end up pushing them, trying to sell them things they either don't need or things that they need to have sold or things of that nature. And it ends up damaging the relationship
Right.
before it gets started. So, like for me, we have, in that regard. So, how would you look at that in that regard when it comes to relationships, and what does that look like going forward?
Well, that's part of the reason too. When I was on Wall Street years ago, that was more of a transactional job when I worked in the institutional business. You got paid on transactions, et cetera. And after doing that for 20 years and realizing that, just like I said, what I observed around me, that's why when it came to doing what I'm doing right now, rather than joining some of these other types of firms, which are not fiduciaries, I joined one, which is one, which means we don't get paid on transactions. We get paid one management fee and that's it. So I'm not driven by transactions. I'm not driven by other people offer me a point or two to sell a client their particular investment or whatnot. So it's totally objective, and it allows me to make objective decisions based on what's best for the client. And it's there. There's no other. I have no other forces working against me why I wouldn't do what's best for the client in that sense. Insurance people are different. We have insurance people here, and I don't do insurance personally. I don't do insurance, and the reason I don't do insurance, and I know there are other advisors who do because they'll get their insurance license. Insurance guys get paid like 5% up front. I mean, they're big fees in insurance policies, and I don't want to have that anyone point their finger to me that that's a conflict of interest vis-a-vis putting them into a much lower or no expense bond that I can buy for them instead. If I feel so, if they want insurance, I send them elsewhere to do it. Not, I want nothing to do with it. That way, I've washed my hands clean of it and whatnot. We will have our people review outside insurance policies to make sure they're appropriate and they're not getting ripped off. But as far as doing it just from a standpoint of just complete fiduciary status, I don't want to do it.
Love it. And that last piece, Ron, is technology and how it's so important to always stay up on your technology and make sure you're utilizing the best things going forward in your business. So, ladies and gentlemen, this is the type of people that we love to interview. Ron has a great insight in the space, and I'm so glad he stopped by. Ron, how can our audience get in touch with you, or how can our global audience connect with you if they want to find out more information about you and your awesome work?
So a couple of things. Our website is Magnus, Magnus Financial.com. And on the website, I've posted actually a few articles I've written which reflect on some of what we talked about today. There's an article I wrote which tells you the 5 things to look for in a financial advisor. I mean, these are educational articles. They're not just about me or the firm. I've got another article about the woman I mentioned before. The case study is up on the. So there's actually our website is. I've put a few things up there which are helpful for people, not just marketing for myself or for the firm. So magnusfinancial.com is our website. My email is Ron, Ron.Deutsch, Deutsch, SCH at Magnus Financial, MAGNUS FINANCIL.com. I can be reached there directly. My LinkedIn profile is Ron Deutsch. I use it, but it's more for a place for people to ask questions or look for me there. And those would probably be the three best ways. I can give a phone number too, but I'm not sure if people do that or not on these shows.
Oh, sure, please do. Absolutely.
Okay, so my cell phone is 24/7. Clients call me all day long. It's 914-384-4802. And like I said, I work remotely 2 days a week, in the office 3 days a week. That's the only place I can be reached for at 24/7, basically. So that would be, those would be the best ways to get a hold of me. So
I love it.
For that.
Ladies and gentlemen, please connect with Ron. Reach out to him. Great guy. We want to thank US Wellness Meats for sponsoring this episode. And the authentic tip of this great interview: trust is built time through competency, reliability, and having your client's best interest. When you build trust over time the right way, it'll skyrocket your business to the next level. But again, remember this: it takes time, so don't rush it. Again, my name is Marques Ogden. I am the host of the Get Authentic with Marques show. Thanks for tuning in. Have a fantastic day.